Here is the Ibbotson chart, which is usually the Standard & Poor's 500, but I put the Dow in. And we have a modest depression in the 30s. We have right here, that was what I call the Guadalcanal low. And up we go from the depths of 1942. Adam, the headline for me is on a 70-year basis, we're right on trend. Are we on trend or are we rich right now?
I think we're probably a little bit rich right now. I mean, it really depends on how you value things. If you compare it to the bond market, I think one of the challenges, bond yields are low. So when you look at equity risk premiums, they look wide and maybe attractive. But I've been bullish on U.S. equities the last several years, and our view of the world has really changed here in the last 2 months.
Your magic, and people love to take shots at you, but the magic is when you're cautious, you're still in the market. Yeah. I don't get go to cash from Adam Parker. So bring back the chart again. I zoomed in on this. This is the same chart with that trend line back 70 years, and you can see we've been elevated, but not all that much. How do you be in the market here with caution, with responsibility? How do you be an adult in this market?
Look, there's always things that are mispriced. Even over a kind of flattish market from mid-December till, say, a week or two ago, there were still stocks that were up a tremendous amount. So I'm really trying to always beat the index more than I am trying to make that call. As you know, making that call is tough, and we've usually been optimistic on equities since that, as you show, generally pays. So I think there's a number of opportunities at the sector level. For example, biotech. If I told you there would be a Republican sweep, you might have thought that would have recovered more given Hillary's tweets a year and a half ago about drug pricing. So that's an area I think is mispriced. I think the growth there and the innovation potential is pretty high. And so even if I get a little bit more cautious on the market, I want to buy more and more of that going forward. There's a number of opportunities like that.
Adam, doesn't Dow 20,000 just simply tell me on that sector story that I need to rotate out of financials?
I don't know about that. I honestly don't have an earnings algorithm for the Dow. It's a price-weighted index, and I don't really know. I think,
but come on, take it to the SPX math.
Yeah, so I think more about earnings, and to me, there's definitely opportunities. I think the financials, we still have exposure to the banks. You do have the specter of a lot of growth in shareholder return. You have the interest rate environment that could help. You have the specter of lower regulation, and then you have the potential for lower taxes. So I think the risk reward is still skewed to the positive on financials. Maybe the move was a little too quick post the election, but I don't think it makes sense to walk in the office and start shorting these stocks. So therefore, I kind of have a modest positive bias here.
How much protectionism is priced into U.S. equities right now?
I don't think that much. I mean, if you really think about the fact there could be something like a border adjustability tax, I would think that would make WTI go up a lot, and maybe you'd get some exposure in the energy space. I still think there's opportunities there. Our firm, the experts that we have, think it's kind of a 50-50 deal, and I don't think 50% of it's in the price. So if you're doing it from that angle, there's probably still some opportunities.
It's Friday. I've got to open my envelope of my 401k this weekend. How do I do your world given all the news flow that I'm seeing from Washington? How do you prism that? How do you synthesize
So the main synthesis point is, for the previous few years, we had a view there'd be low earnings growth, but higher multiples because the U.S. looked relatively better. And the exact opposite is true now. We're forecasting much higher earnings growth, 18% higher earnings over the next 2 years. Wow. Over 2 years.
2 years.
Because we have lower taxes in there, we have a stimulus in there, we have repatriation. But we think you're going to start paying a lower and lower multiple going forward because of the uncertainty in Washington, because of a more hawkish skew to the Fed, et cetera, et cetera. So I think it's a tension of lower multiples and higher earnings now.